In the realm of investment, few assets hold the allure and intrigue of Bitcoin and gold. Both have captured the imagination of investors seeking to safeguard and grow their wealth. Both are seen as hedges against economic uncertainty. But beneath the surface, Bitcoin and gold are vastly different beasts. Gold, the venerable precious metal, has been a store of value for millennia. Its history is intertwined with empires and economies. Bitcoin, the brash newcomer, is a digital asset born from the technological revolution. It represents a radical departure from traditional finance. This essay delves into a comparative analysis of Bitcoin and gold as investment vehicles in 2025. We will explore their fundamental differences, analyze recent price movements, and assess their long-term prospects. Our journey will take us through the macroeconomic forces shaping their destinies and reveal intriguing similarities in their market behavior. Ultimately, we aim to provide investors with the insights needed to navigate this fascinating investment landscape. Join us as we unravel the complexities of Bitcoin and gold in this 2025 investment showdown. At their core, Bitcoin and gold operate on entirely different principles. Gold is tangible, a physical asset you can hold in your hand. Its value is derived from its scarcity, its historical use as a currency, and its enduring aesthetic appeal. Bitcoin, on the other hand, exists only in the digital realm. It is a decentralized, peer-to-peer network governed by cryptography. Its value stems from the trust of its users, its limited supply, capped at 21 million coins, and its potential to revolutionize financial systems. This fundamental difference extends to their technical attributes. Gold is traded on traditional exchanges and through various financial instruments like ETFs and futures contracts. Its price fluctuates based on supply and demand dynamics influenced by factors such as central bank reserves, jewelry demand, and industrial applications. Bitcoin, in contrast, is traded 24/7 on cryptocurrency exchanges worldwide. Its price is driven by a complex interplay of factors like market sentiment, technological advancements, regulatory developments, and macroeconomic trends. The year 2025 has been a roller coaster ride for both Bitcoin and gold, with each asset responding in unique ways to the ever-shifting macroeconomic landscape. Gold, the traditional safe haven asset, surged to record highs in the first quarter, breaching the $3,000 mark for the first time. This surge was fueled by safe haven demand amidst geopolitical tensions and escalating trade wars. President Trump's unexpected announcement of a 10% tariff on all imports sent shockwaves through global markets, further bolstering gold's appeal as investors sought refuge from the storm. Bitcoin, known for its volatility, has also experienced a wild ride. After starting the year strong, climbing to over $100,000, it experienced a sharp dip in April following President Trump's tariff announcement. Interestingly, while Bitcoin initially mirrored the losses seen in traditional equity markets, it quickly stabilized and even posted modest gains while the Nasdaq continued to tumble. This decoupling from traditional markets, albeit brief, has fueled speculation that Bitcoin may be evolving into a more independent asset class. Section 4. Gazing into the crystal ball: long-term outlook and challenges. Looking ahead, both Bitcoin and gold face unique opportunities and challenges on their paths. Bitcoin, still in its relative infancy, holds the potential for exponential growth. Its decentralized nature, borderless transactions, and potential to disrupt traditional finance have captured the attention of tech-savvy individuals and institutional investors alike. However, Bitcoin also faces significant hurdles. Regulatory uncertainty, security concerns, and the environmental impact of its energy-intensive mining process pose ongoing challenges. Gold, with its millennia-long track record, remains a symbol of enduring value. Its role as a hedge against inflation and currency debasement is likely to remain relevant in an era of unprecedented monetary expansion. Central banks, particularly in emerging markets, continue to increase their gold reserves, further supporting its long-term prospects. However, gold's lack of yield and its potential underperformance during periods of strong economic growth remain key considerations for investors. Section 5 echoes in the market, similarities in behavior. Despite their fundamental differences, Bitcoin and gold exhibit intriguing similarities in their market behavior. Both assets are sensitive to changes in global liquidity conditions. Loose monetary policies and low interest rates tend to benefit both, as investors seek alternative assets to preserve their wealth. Conversely, rising interest rates can diminish their appeal, as investors are drawn back to traditional fixed-income securities. Furthermore, both Bitcoin and gold are influenced by institutional flows and the accessibility of investment vehicles like ETFs. The increasing participation of institutional investors in both markets has brought greater liquidity and price stability. The availability of ETFs has also lowered the barriers to entry for retail investors, further fueling demand.